Hello and welcome to a fresh new edition of Bazaar Morning Call. I am Prashant. With me, my colleague Nigel, and Reema joins us all this week as well. Good morning, guys.
Hi, good morning.
Great to start a new week. It's a lovely Mumbai morning. The best weather in Mumbai all year through. But, the market setup is perhaps a little more subdued. And I think the wait for new highs in the Nifty perhaps becomes a little longer. We'll see. That's the Nifty for you, and where we left off, 18,512, about 100 points away from new highs. But this morning, the SGX is showing a lower start, and that is something which we will watch out for. It's showing a 90-point lower start. The main event, which we will talk about a little later, is the Powell speech, which is bang in the middle of the week on Wednesday. The speech from the main man of the Fed has caused markets to turn, tumble in the past. Will it happen again? We'll see. And of course, there are these protests in China over the weekend, over the last couple of days, which are building up. Will that amount to anything? I mean, it's showing up in markets in a big way in Asia. It's showing up for the Chinese currency, which is down about almost 1% the last I checked against the USD. And that is something which I think will be important to track as well. But let's kick this off. Good morning, guys.
Hi, good morning. Hang Seng is down 3.5%. The Taiwanese markets is down 1.8%, and the Chinese markets are down 1.5%. So that could cast a bit of a shadow on the Indian markets. But finally, we've been dithering for so long on. Towards the end of last week, we got some signs that markets are trying to attempt a bit of a breakout move and perhaps get to its all-time high levels. The Nifty and the Sensex gained 1.1% last week. And the big driving force is going to be the decline in crude prices and the strong FI buying. So yes, in Friday's trade, the FI buying was offset by the DII selling. But in the month of November so far, the FIs have bought nearly 11,500 crore rupees. And look at crude prices and the tumble that we've seen. Crude prices are now below $82 per barrel, and that's going to provide that tailwind for our markets.
That support, right? That much-needed cushion, oil prices, single-handedly, absolutely. The most important thing as far as Indian macros are concerned. But what are we watching out for? The big event, as I said, is the Powell speech in the middle of the week, which I think will kind of differentiate what happens in the first half and the second half. Markets may trade in anticipation to that. We've heard the Fed chair earlier kind of jolt markets out of complacency. You remember the Jackson Hole speech, 8 minutes short and sweet, and he kind of said, well, there needs to be a lot more to be done. But I think this time it's different because we've got data which is kind of telling us that things are slowing in the US. But even more than that, we just had FOMC minutes last week, right? Which showed us that maybe the pace of Fed hikes are going to go slow. So it'll be very unlikely to see the Fed chair going hammer and tongs again and saying, well, a lot more needs to be done and all of that. So the bar will be very high for markets to receive a hawkish message. Whatever he says, the bar will be high for a very hawkish interpretation. Can't rule it out, but I would say that the bar is high in that sense. Lots of data out of the US this week as well, which I think will give further fillip. There is the inflation number, there are job openings, there is the ISM manufacturing number, and of course towards the end of the week, which is on Friday, we get the November jobs data as well, which I think is very important. Just a few other points in terms of the market structure in the US. One is that on the S&P 500, the put-call ratio is reaching record levels. It is something similar here in India as well. That is one. And second, the S&P 500 WIX is now close to year-to-date lows. It's basically getting to lows from where it has bounced earlier. WIX going down attracts flows, but it also suggests rising levels of complacency. So keep an eye on this. These two factors, both these suggest that maybe at the margin one needs to be a little careful out here. But I would again say, I said this a few weeks ago, two things, momentum and the calendar. By calendar, I mean it's usually very unlikely that you see a massive new trend either up or down this late into the year as you wind the year down. And I would say because of these factors, perhaps there is more to go here on the upside before this starts to turn or in any meaningful way in that sense. Volumes in any case are lacking and thinning out. In India, I just want to repeat a couple of points I made on Friday on the editors roundtable. There is immense bullishness. We're waiting for new highs, but just these data points tell you again that at the margin one needs to be a little watchful. Futures premium on Friday on top of spot closed at 151 points. It's at a record high. FI long positioning is at a 2-year high. This is all based off a Thursday's figure, and some of these numbers would have changed a little bit, but the broad direction is clear. FI long positioning is a 2-year high. Client positioning, by the way, which is, HNIs, etc., which was also long, that is wound down. It's very small now. Number 3, DIIs, that is the second highest short position on record. FI is long, almost at records. DI, second highest short positions on the record. And market-wide puts exceed calls, again by somewhat of a record, which again means that, you would normally say, well, puts exceeding calls in such a large fashion provides comfort, and it does. But if you go back in history and look at when, this has reached these kind of levels, it usually marks a bit of a turn. So all I'm saying is be mindful. There is exuberance in the system. People are long, these are times when one needs to watch things a little more closely. Buy on dips has worked, but I think, you need to be cognizant of, small pullbacks, small changes, especially important if you're trading this market. This morning, SGX indicating a 80-odd point lower start. Nigel, what are you watching?
Well, on Friday's trading session was as good as any. And we keep talking about the Nifty. But for me, I say the session was the best, actually, is because the broader markets participated. And that was lacking the previous 4 trading sessions. A lot of portfolios will be feeling good. And I'll track that very closely because the breadth of the market was something that was getting a little bit worrying. On the cash market side, well, the institutional numbers, they cancelled each other out. What are the FIs doing in the F&O market? Well, they've been net long and aggressively net long. They added some shorts. Close to around 13,000 short contracts is what they've added. And that's why the long positioning has come down to around 71%. So they remain net long, but it's come down a little bit. Now, on the call side, they wrote close to around 1.85 lakh calls. And that's in the ratio of close to around 5 calls for every 1 put. So at higher levels, you're expecting some bit of a supply that's coming out. And 2 active strikes is what we saw. 18,500, 18,600 calls, both of them very, very active. There was an open interest addition of close to around 50 lakh shares at both these 2 strikes. The premium is anything between 60 to around 110 rupees odd. So that gives you some bit of a supply resistance at higher levels. However, we did see the 18,500 put as well. That was very active. And the premium is around 80 rupees out there. The open interest build up was close to around 25 lakh shares. So there'll be some bit of support at the lower end as well. Now, normally we only look at the Nifty, open interest and the options data. But the Nifty bank, it's a bit of a rarity. More than 30 lakh shares were added on the 43,000 call. The premium started at around 500 rupees and ended close to around 300 rupees. So that's giving you a sense that maybe at around that 43,500 odd, we could see some bit of a resistance on the Nifty bank. It's a bit unnatural that we see such a big open interest build up. So I thought we'll highlight that. Let's plug in the numbers then. The Nifty support level, since you have the highest open interest on the put side at around 18,300. The crucial range will be 18,250 to around 18,300. However, since there was aggressive call writing at around that 18,500, 18,600, you plug in the premiums out there, and that's telling you 18,650 odd. That'll be a bit of a resistance zone. You're getting a dip today. At some point of time, maybe track the first hour lows and look to get into the Nifty because the buy on dips has worked. You keep the stop loss at around 18,300 and hope that, in fact, we're likely to see more of what we have seen in the last few days. Reema.
Well, I'm also watching what's happening in the Asian markets, particularly the unrest in China right now over the stringent COVID-0 policy. And usually we do not see this public large-scale dissent in China against the government, but this is happening this time. 3 years into COVID, and the COVID-0 policy, which has been taken on by the government, is now having a toll. There are the footages that you can see over the weekend. And now investors are watching how Beijing is going to handle this brewing crisis, because it is a tricky situation. Despite the stringent measures, China's COVID cases hit an all-time high record over this weekend, right, since the pandemic began. So can they really accelerate reopening, which is the hope, in the global investors' mind? Or are they willing to go ahead and take fresh lockdowns against what the public wants right now? So this is a bit of a tricky situation. And remember, if they try and go ahead and do fresh lockdowns from here on, not only is it going against this public outcry that we are seeing right now, it's also a bit against what China is trying to do. It's trying to stimulate the economy. Remember, on Friday, it cut the reserve ratio requirements by 25 basis points to boost lending. So markets in China have been swinging like a bit of a pendulum. On one hand, it goes up. when there are reopening hopes which rise, and on the other hand, they start declining on fresh lockdown concerns. So as I said, Chinese markets are down 1.5%, Hang Seng is down 3.5%, and Taiwanese markets, because there are a lot of semiconductor linkages, those markets there are down 1.7%.
It's crazy, right? I mean,
absolutely.
3 years and